The US dollar is losing strength fast in 2025, and gold prices are breaking records across the world. Gold has now passed 4,000 US dollars per ounce and continues to climb. Many people are wondering why this is happening and what it means for the American economy. The answer lies in inflation, debt, and a shift in global confidence away from the dollar. For years, the United States dollar has been the world's main reserve currency. It is used for trade, investment, and savings everywhere. But that dominance is now under pressure. Inflation in the United States has remained high, near 4%, even after the Federal Reserve raised rates. When the cost of living goes up, the power of each dollar goes down. People start looking for something that holds real value, and gold becomes the natural choice. Real interest rates in the United States are also very low. Real interest means the rate you earn after removing inflation. If banks give you 4% interest but prices rise at the same rate, your real gain is zero. Holding cash in dollars feels less rewarding, and gold looks safer. This is one reason more American investors are moving money from savings into gold and other hard assets. Government debt in the United States is another major problem. The national debt is at record levels, and investors worry about how long the government can keep borrowing without weakening the dollar further. When debt rises and confidence falls, foreign countries start to reduce their dollar reserves and buy gold instead. Central banks around the world are quietly trading dollars for gold as a long-term protection plan. The global economy is also driving this change. Trade tensions, wars, and political risk make investors nervous. When uncertainty rises, people seek safe assets that do not depend on any single government. Gold has no country, no central bank, and no default risk. That is why it is gaining value while the US dollar loses it. Another key factor is the supply of gold. Mining output is steady but limited to about 3,000 tons each year. As demand for gold rises in the United States and overseas, the limited supply cannot keep up. This simple rule of supply and demand keeps pushing prices higher. Gold has become not just a safe investment but also a profitable one. Speculation is adding even more fuel to the fire. As gold prices rise, traders jump in to make quick profit. Each rise brings more buyers, and that creates a powerful loop that drives the price even higher. Weak economic growth in the United States at about 1% is another reason why investors expect the Federal Reserve to cut rates again. Lower rates mean a weaker dollar and stronger gold. Financial experts now predict that gold could reach $5,000 per ounce before the end of the year. The fall of the US dollar, combined with high inflation and rising debt, has created one of the biggest gold rallies in modern history. The message is clear. As long as the dollar keeps falling, gold will keep shining. Gold remains the ultimate symbol of wealth, power, and stability. In a time when paper money weakens and confidence fades, gold stands firm. The question now is how far the dollar will fall and how high gold will rise. If you found this presentation helpful, hit like, share, and tell us what you think. Will gold keep climbing, or is a correction coming next? Let us know in the comments below.